FU money. What does it take? What does it mean? How can we get to FU levels of money? There's this great scene from The Gambler where he talks about if you are up a certain amount, if you're up 2.5 million, you cash out. You buy yourself a crappy little house, you put the rest into government bonds, you just live on that. No one can tell you what to do. No one can force you to work for them. No one can say what you do with your free time, because you know what? You can just say F you at the end of the day. Now, this has changed a little bit since 2014. That's when this came out. Let's talk about the different levels of FU money, and we'll go through how much you need to invest to get to those levels. Okay, we'll look at Bitcoin. We'll look at the S&P 500. We'll also talk about other ways of getting there, like real estate. I'll give you some of the pros and cons of all three because I have all three as investments, and yeah, there are definitely some trade-offs there. If you guys want to see more videos like this, let me know down below in the comment section. I just posted a video in the Telegram, which is free, going over some of my favorite equities to buy right now. If you want to trade crypto, there's a link underneath the video to BYDFi. We're at this time where like there isn't much volatility, and then all of a sudden, boom, breakout. Then we calm down, and then boom, breakout one direction or another. Obviously, it can be quite volatile in a short period of time, but when you zoom out, Bitcoin's done really well for a very long time. Basically 3 years it's been up and to the right, and we've had these times of like boring chop sideways, maybe even a little bit down, and then we see big moves to the upside. So we've been chopping sideways for a while now. If you want to put on some leverage trades, you can do that. That's, you know, on the shorter frame, shorter time frame, you could actually get some pretty good gains because we've still been a bit volatile short term. And then, you know, if you're setting up for long-term trades, yeah, this is typically the best quarter of the year, so, or the best quarter of the cycle. So if you want to position yourself, now's the time to do it. You can trade and get up to a $13,000 bonus as well with my link underneath the video. So I thought about talking about what's happening in the market. We have kind of a nasty day in stocks, down 1% on the NASDAQ because of the Trump administration planning to restrict globally produced exports to China. So just some fear over that. We have gold falling down, but I thought, you know, zooming out, why do we invest? It's really to do what we want with our time, to get FU money. And I thought it would be cool to take a look at what FU money means. Right? So like I said, there's this great scene from The Gambler where basically if you've made enough money, you don't have to do what you don't want to do. And I think this is a place where a lot of us want to get to one day. Right? And I think there are different levels to it. Let's go through some of the different levels. And of course, like I realized that I have a worldwide audience. So people have different expenses, people have different incomes, but this will be kind of directed to the Western world with what I know about like spending, what do you really need to make these days. And we'll go through how long it takes to get to these levels based on what you invest in. And like I said, I think there are different levels to this. So we'll go through level 1, level 2, level 3. Level 1, I think, is $100,000. I realize not everyone's there. If you have $10,000 in net worth, you can't really say F you to anyone. Now, maybe you only spend $1,000 a month, right? Then $10,000 is almost a year's worth of expenses. Okay. But I think for a lot of people, $100,000 is a key psychological level, and that's usually over 1 year's worth of expenses. Now, again, not for everyone. If you're on the East Coast or West Coast or you spend a lot, we spend more than this each year, but this is a good level for a lot of people to say, I can step away from my job, right? Let's show what this means. You can step away from your job and you can find something you like. Right. So if your job is killing you, you're super stressed, typically this is enough cushion. Now, part of it is how you keep it, right? $100,000 in cash is very different than, you know, $100,000 in a 401k that you can't touch, and then you have $12 in your bank account. But like, that's a position of FU. I have some built up, and I guess this kind of cash level, I suppose at $100,000, where you could walk away, you could live for a while, you could find out what you really want to do. The next level, I'm saying, is 1 million. Not because you can just leave your job and go find something else, but you can do what you want, I'd say full time. For most people, right? If you burn $250,000 a year, you're not there yet. But if you spend $100,000 a year and you're 45 or something, 40, and you're a millionaire, you can probably do what's known as coast fire, which is you can go do a lower stress job, something that you like. Right? Maybe you want to be a bartender, right? Or go work at a brewery during the day or something. I don't know. You can do what you want, and then you can kind of just let this grow in the background. And then I'm going to say level 3 is like full on fire, financial independence, retire early. You can do what you want. You don't have to work. You can spend money how you want. I was actually talking to someone else about this today, and they were saying that they want to get to this level. And this is the level where you can spend what you want. You can buy what you want within reason, right? You're not buying Lamborghinis or anything like that, but you can buy what you want, spend what you want. You can have a nice house. You can have nice cars. You can eat wherever you want all the time. You can have that $200 bottle of wine if you want on a Saturday. And you don't really have to worry about it. You're at the point where unless you spend really aggressively, you can let this compound even while spending a lot and bring in no income. Based on the 4% rule, this means that you could spend $280,000 a year, assuming this is all in equities or in the stock market and bond market in general. Maybe you have $1 million home, so then maybe you actually have like $600,000 in investments. Maybe even part of that is in cash, but that would still leave you with about $240,000 a year that you could spend. That's with a paid off house too. So you can take 2-3 vacations a year, $20,000 vacations. You can eat wherever you want. You can buy clothes when you want. But again, you're probably not going to buy the nicest brand of everything, but you can still go, you can go buy a Louis Vuitton each year if you wanted to. Like, you can prioritize what you want and you don't have to work. So how do you get there? Well, let's look at 2 different ways. Let's look at, I'm very bad at dragging. Let's look at Bitcoin. Let's look at the S&P 500. These are very different investments. Obviously, the S&P 500 is some of the largest companies in the world. Then Bitcoin, the fastest growing financial asset of all time, or fastest growing asset of all time. I'm going to assume that you get an 8% rate of return for the S&P 500. This is kind of after inflation. And then Bitcoin, you get an 18% rate of return. It's been much higher than that in the past, but keep in mind it's grown a lot. So I think we can assume that over the next 10 years, it's going to grow slower than the last 10 years. So this is really like a 20% rate of return and a 10%, but again, this is after inflation. So how do you get to the first level? Well, to get to the first level, you need to invest consistently. And for the S&P 500, over a 10-year period, you'd have to invest $560 a month to get up to $100,000 after 10 years. All right. For some people, they can't get there. For some people, like, they don't want to wait 10 years to be able to get to the point where they could leave their job and like try to find something that they really like. And I realize you can leave your job and find a different position you like without any money built up. I get that, but it's a certain level of FU where a day's really bad and you can just quit without having another job lined up and feel comfortable. For level 2, it's 10 times that. So for $1 million over 10 years, you need to invest almost $6,000 a month, $5,600 a month. For Bitcoin, it's a lot less. You need $330 a month for level 1 and $3,300 for level 2. So you still have to invest a lot to get up to that millionaire status in 10 years. And part of that is, even though you're getting an 18% rate of return, it's only over 10 years. So compounding hasn't really had a chance to work yet. And then level 3 takes more. It's very hard to get there. Level 3 would take $39,000 a month over 10 years to get up to $7 million in the S&P 500, $23,000 a month in Bitcoin. So even with Bitcoin's great growth, you still need to invest a lot. And then I didn't include this, but you could also do real estate. Now, the difficult thing about modeling out real estate is you can get a 30% return, 40%, or you can get a negative return, which some people get because they're buying overpriced properties. So I'd probably put real estate in between these two if you're competent and you understand numbers pretty well, and you can come at the market with a position of strength. Maybe you have a significant amount of cash. There are trade-offs with all these. We'll go over the 20-year here in a second, but the S&P 500, you can focus on your job a lot more. So you might be able to focus, and if you have a skill that's really in demand, you might be able to get to this point where you can earn $40,000 a month for investments. It sounds crazy, but I know people that do this. So you can not spend that much time. It's not that risky in terms of like long-term growth. It's gonna continue to compound. Bitcoin, on the other hand, probably is going to do better. The hard part about this is we don't know what it's going to do over a short period of time. And also, the position of FU, I think, is very important to have assets that you feel very strongly about that maybe aren't quite as volatile, right? Like, I'm not saying that you wouldn't feel like you're in a position of FU if you have 7 million in Bitcoin, but also 7 million in Bitcoin could turn into 6 million in Bitcoin, and then 8 million, and then 4 million, and then like it can go back up and down a lot. So if you really want that confidence, I'm not sure I would go 100% Bitcoin, right? Even if you feel very strongly in Bitcoin, if you were 100% Bitcoin and worth $7 million, I'm not sure still that you'd do anything you wanted whenever you wanted. A lot of people that have a lot of Bitcoin have a hard time selling it as well because they feel very strongly that they shouldn't own fiat. So then it's kind of like you're letting your financial assets control what you do. Then real estate, you can get incredible returns, but it can be more stressful and take more time. Now, over 20 years, you see a big difference. Compounding has had its chance to work, and I think maybe you don't want to be at level 1 FU in 20 years because, again, that's a long time to work to have $100,000. It's better than most people, to be clear, but I don't think if you're watching this, you'd probably be happy with $100,000 in 20 years, again, unless you're someone that's on a lower income. But to get to that level 1 financial independence or FU money, you need to invest about $180 a month into the S&P 500 or $50 a month into Bitcoin. And then level 2, $1,800 and $500. So you're starting to get to the point now where you're investing a lot more than most people. This is like maxing out a 401k and maxing out, or like putting half of the max into a Roth IRA. So like that's a significant amount. Most people can't do that. So that's getting to $1 million in 20 years. And again, this is average. So you're probably scaling up throughout that 20 years. Maybe at first it's only, $200, $300. Then by the end, you're doing $4,000 or $5,000. And then level 3, you still need to invest a lot. With the S&P 500, we're talking $150,000 a year or $12,400 a month. For Bitcoin, it's a lot less. It's $3,700, which is still a lot a month, right? I mean, at the end of the day, it's not going to be easy to get to that FU money, even over a 20-year time span. Now, you could do this over a 30-year, and it would make a big difference. I didn't run the model, but off the top of my head, well, actually, I can do it right here. I have it pulled up on the other screen. Over that time period, 30 years in Bitcoin, you could, I'm just doing this real quick. If you did $2,000 a month over 30 years, getting an 18% rate of return, keep in mind it probably will go down, that'd be $20 million. So that's incredible. If you did about $680 a month over 30 years, you'd have about a $7 million portfolio at 18% return. Now, keep in mind, over time, Bitcoin probably won't scale as much. It probably won't get 18% returns for 30 years. I could be wrong, but I wouldn't assume that's going to happen. So at the end of the day, I think you have to realize that you need a really good income if you want to get to FU money in any kind of short period of time. I think this kind of leads people to saying, I need to invest in something that will give me an even better rate of return than 18%. So I'm going to go buy altcoins or something like that. But I warn against that because there are altcoins that, do well, but most of them underperform Bitcoin over a long period of time. When I take on extra risk, I would rather trade Bitcoin with leverage or other top altcoins. I think that's actually less risky, and it's made me probably more money over time than investing in altcoins. But really, you want a very high income. That's going to do the best for you. If you start investing into really risky stocks or cryptos, it can really hurt you, because I don't know about you, but I'd rather have $300,000 instead of $0. Like, if I'm saving a lot of money, I don't want to just keep on plowing $3,000 each month into some really risky asset that I think might give me a slightly better return than Bitcoin. Because at the end of the day, I think Bitcoin and the S&P 500 are much more of a sure thing than some small altcoin. And I'd rather have something than nothing, than like a chance of nothing. And most of these altcoins do go down significantly. So I have a mix of all three: S&P 500, Bitcoin, and real estate. Bitcoin I think of as my higher risk, higher return asset. The S&P 500, just super boring. I don't have to do anything, and it's going to give me, market returns 8 to 10% a year. And then real estate does slightly better than that, but there's a little bit more maintenance that I have to do. There are some cool things about real estate, like tax write-offs and stuff like that, or depreciation that can be really beneficial as well. And you can kind of lock in better deals because you can see what the numbers are before you buy them, so you can negotiate a little bit better and maybe have a little bit more of an indication as to will this cash flow right away, versus the S&P 500, which could dump 20% tomorrow and you would have no idea. Let me know your thoughts on all this underneath the video. Let me know what level of FU money you're aspiring to be in the next maybe 5-10 years. And I appreciate you watching. Again, if you want to trade crypto, there's a link to BYD5. I would sign up for multiple exchanges. There's BTCC, BLOFIN, BTCC, and WEEX underneath the video as well. Appreciate it. I'll see y'all.